to Property People. Today, I am very pleased to be joined with Akhil Mayor. Akhil is a financial advisor, does financial analysis, wealth management, retirement planning, financial planning, insurance. He's good at financial accounting, anything financial. Akhil is a star at. He's got a great track record, works with some great people, and now the managing director of our mortgage broker. Thank you very much for joining us today, Akhil. How are you?
Thank you for the introduction, Sam. Yeah, very well, thank you. Very well. Good to be here.
Good. So, in true form, I always like to find out, this is about property people, and you are very much a prominent property person. I always like to find out a little bit about the story, the background. Who were you at school? How did it all start? Did you always want to become a mortgage broker?
It's a good question, actually. I've never had this sort of question. So yeah, let's go back to the start of it all. So in my early days during school, I was actually a bit of a nerd in school, to be honest with you. I did very well in maths. I enjoyed English. I enjoyed science. But as boys do, we get rumbled in with our friends. So what happened was I got into the wrong circles. I went a bit off the rails. My education went a bit down, but we had fun along the way. But I still self-educated myself and got some decent grades out of school. I've always been an entrepreneur in my own mind. My family background's very entrepreneurial. They're all self-employed in the background. With regards to the types of businesses they're into selling jewelry, as in 22 karat Indian jewelry in particular.
Nice.
And also property itself. So I've always had that bloodline within me, being an entrepreneur, opening my own business in the future. But growing up, I never really knew what I wanted to do. But what I did know that I wanted to go into business with something to do around property. So I went to college, got my my A levels there, and then I wanted to take a year out before I went to university. So I went into a local branch in Halifax, down the high street, gave my CV in, and that was back in 2002. And a week later, I was behind the cashier desk doing cashiering and putting money into people's accounts. So that's where my day started in banking in 2002. So what am I now? I'm nearly 37 now. So been in the game for some time now.
Excellent. Okay, so that was so in terms of being a mortgage broker, or a finance broker, what term do you actually prefer? Is it mortgage broker? Is it finance broker? And in terms of financial advisory, can you kind of differentiate what those three different things are? Because they all amalgamate into one, or are they very distinctly different things? And can you do all of them, or where do you specialize in at least?
Yeah, that's good. So they are distinctly different. I would definitely say they've all got their own qualifications that you need to obtain before you can give the relevant advice. So I am CMAP qualified, and what that means is I can give clients mortgage advice, insurance advice, and protection. So the services that I can offer are mortgages for whether you're a first-time buyer, a buy-to-let landlord, or a commercial landlord. I can give the relevant advice and structure that finance for you. I can also give you advice and execute insurance policy. So I can give you advice on protection, life cover, critical illness, income protection, and so on. And that includes buildings and insurance for your property purchases as well. So to give that sort of advice, you need to obtain a qualification, which is CMAP. There's three qualifications, there's three test papers, so CMAP 1, 2, and 3. So I have that qualification. I've got a certificate here on the wall over here somewhere, you can see on the right. So yes, I've got that relevant qualification. Within the business at our mortgage broker, we've got other specialists. And what they do is they've got the relevant qualifications to give people advice around financial planning, around investment and pension planning as well. So I can't give that relevant advice. However, we've got a team that work very closely with our mortgage broker that can give that client the relevant advice. And we do that day in, day out. So we call ourselves the one-stop shop for someone that wants to buy a property, someone that wants the income and life protection, and then somebody that we can help grow their portfolios and ensure that we preserve their wealth for their legacy for the children going forward.
That's pretty impressive. So as the managing director of our mortgage broker, how long has that been set up?
So my experience in banking and finance, and actually investing in property myself, goes back to 2002. So I've been in the game for quite some time.
Brilliant. Nearly 20 years.
Yes, nearly 20 years. I formed our mortgage broker in 2017. So I've been doing it some time. I've had various roles within the mortgage industry, within the banking industry, but it's always been a close, it's always been a passion for me around property. So I married that with my finance experience with relevant banks, high street banks, in particular HBOS and Lloyds, where I was a credit analyst, I was a relationship manager. So my 18 years goes back quite some time. And the beauty about that is in 18 years, I've made great connections with
Yeah.
SME, with personal clients, with wealth clients. And, you know, you and I meet quite often at networking events, right? So
Yes.
I like to network, and we have fun when we meet up. We have a drink together. And it's all about having fun, right? We're there to self-educate, meet other people, but we want to give back. And I think this is what it's about, right? I think we're in these times now where we have to self-educate, and it's all about giving back, because ultimately we all win. It's a win-win. It's got to be a win-win. And how we as a brand stand out in the background is by doing things out the norm, right? So we network, we meet people, we shake people's hands. These Zoom calls are great. Listen, you know what I mean? It fills a gap, right? I do these daily, and like you are as well, you're doing them daily, right? So it does fill a gap, but I still prefer that one-to-one interaction. You know, we shake hands, you know, we have a drink together, and we can really deep dive into people's deals and how we can help them.
So it feels to me that yes, your business that you've set up a few years ago, Our Mortgage Broker, is very much a people business where you've put together a panel of experts in a variety of different niches regarding financial planning, whether it be taxes, whether it be insurance. I think I saw you've got a party wall surveyor as well on your panel. So regardless of what somebody, very much geared towards, it looked like to me, but correct me if I'm wrong, it was very geared towards property investors. Would you cater to, let's say, the first-time buyer or the family market or downsizers and the retirees? You know, is it all-encompassing, or is it very much, are you focusing on a specific segment of the market?
No, it's a great question. What we've done is I've formed a company that can help every single client, whether you're a first-time buyer or a seasoned investor. So we've got the right expertise, we've got the knowledge, and we've got the lenders that can support a client from cradle to grave. That's what I like to call it. So
Yeah.
if somebody wants to move out, somebody just got married, they want to move out from their parents' home, they want to buy their first home, we've got the experience, we've got the know-how, and we're currently doing applications like that as we speak. So we help the baby boomers, we help people that are moving into their first home, we help clients with incorporating their portfolio, so we can refer people to tax advisors. You know,
Yeah.
It's all about wherever you are in your investment journey, or whether you just want to buy your first home and that's it.
Yeah.
Invest. We can help you, and we'd love to do that, because we call our clients, but we call them friends and family as well. So a lot of our clients that we do business with and help to secure their mortgages and give them the relevant advice, we meet them for a beer, we meet them to play golf. You know, this is things that we enjoy doing, and we get a good thrill out of that, and it becomes more of a family environment, and that's the formation that I've tried to encourage within the business and the people
that makes sense.
So
that makes sense. I think that makes sense. So it's an interesting way of doing it, because there's different philosophies when it comes to business. And you mentioned that you've got an entrepreneurial background and mindset. Some people really try and focus on that niche, and some people trying to have a larger net. And the way that I understand what you're trying to do is, if somebody comes into your ecosystem looking for some sort of property related activity, whether it's to do with finance or surveying, you should be able to direct them to the right place. And then once they've had a good relationship, good service and a good experience with that person, they will stay in the ecosystem. And it's all that, I mean, I think I've heard of, actually, I don't know about you, I've heard of these kind of co-working spaces now that they're building. So they now have specialized co-working spaces. So one of them will be purely for architects and design. So you'll have all kind of designers in there for different types of things, or you'll have property related offices. And you mentioned you're actually in the office today.
Yeah, I'm in the office today. Unfortunately, you know, duty calls, work. I'm a key worker for my clients, right? So as we said, the mortgage industry is open. We've got conveyancers doing what they do best, and we've got to service our clients, because we've got completions happening every other day of the week at the moment, which is good to see. And we're
so you're busy.
We are literally flat out now. We've still got scope to take on new business and more business. We'd happily take on new inquiries, but we are inundated with work. So we are blessed from that perspective, that our business hasn't taken a taken a hit, albeit that the application's got a bit more longer in processing, but it goes with the territory. But with regards to the question around the co-working space, it's funny that you touch on it, because
Yeah.
where I am is my office is in a service building, right? So we have our own private office. However, we work out of a Regis service office. So Regis, for any of the viewers, probably do know who Regis are. They're a large office space company that have offices around the whole country and in Europe as well. So it's a great environment to be in. I rub shoulders with people all the time when we go into the kitchen to make coffee and lunch and so on. So it's a great space to meet new people and introduce one another. And it's an opportunity that we never would have had if we worked from our spare bedroom at home, for example. Plus, my kids will do my nutting if I was working from home. But I'm looking forward to them to go to school eventually, but hopefully it'll be soon.
Yeah, absolutely. As you said, I always find with life in general, there's always pros and cons to absolutely everything. But I really like the idea of multiple different professions that all have some sort of synergy working in the same space, so that referrals become easier, building teams becomes easier, because SMEs in all industries are finding it difficult to maybe take on the extra overheads of having huge staff and employment overheads, and then rents as well. So this is the kind of a cool way of working. When you mentioned that you're in a Regis, that's very cool. Now, in terms of working for all those people that are aspiring as well to be a mortgage broker right now or in the finance, in terms of the quality of life, because I think you mentioned to me before the call that you actually work a minute away from where you are, but you can potentially do deals up and down the country, right?
That's correct. So the beauty about being a mortgage broker is we help clients across the whole country. We even help clients that reside in Dubai, that reside in Australia, that reside here. So we benefit as mortgage brokers of supporting clients across the country and internationally. And how we do that is by working with lenders that accept those types of clients and those types of applications. From a technology standpoint, realistically, all we need is our laptops or our PCs and some Wi-Fi, and we're good to go, to be honest with you, along with our mobile phones or our landlines. So from a technology standpoint, we can work from wherever in the world, and we can support any client, whether they're in England, Scotland, Wales, or a further afield as well.
So that's globalization for certain industries has been a really good thing, because now your audience, now your client base can be absolutely anywhere, and you can be putting out loans into multiple different, nationally, it could be internationally one day as well. Do you do anything internationally yet?
So we help international clients buy in the UK for either a secondary home or an investment property. So if anybody's looking to buy in the UK, yes, we can definitely support them. We don't do the vice versa at the moment. Okay,
cool. So what I'd like to do is discuss a little bit about the current market, and just give us a view of what because you're speaking to lenders across the board on a daily basis, and give us an idea of what's been happening to each different segment of the market. So, for example, in terms of first-time buyers, are you finding that there are any first-time buyers right now making new applications, or is that literally since the lockdown gone down to zero?
Right. So first-time buyer applications are still proceeding, and we're still doing a lot of that work at the moment. The beauty is, so if we look back pre-COVID-19, so we came out of Brexit, that was signed at the end of January. The markets were amazing. There's lots of buoyancy, lots of happiness in the market, lots of transactions happening. The valuers were on point, and things were really well. And we thought 2020 is going to be a fantastic year. Yeah. Unfortunately, March came, coronavirus turned up, and things came to a halt. So what happened was, initially, the market reacted, and lenders retracted from new applications. And the reasons why they retracted from the new applications and took products off of their shelves is for two reasons. The first reason was the government then announced that they can potentially take up payment holidays. So you can imagine the amount of inquiries, applications, and phone calls that lenders would have got to process payment holidays. And two, the lenders that had applications in their pipeline, it was their primary initiative to make sure they service those applications and get them over the line accordingly. So what we've seen now is we've had that 3 weeks of reaction. We've now seen in the last sort of couple of days and going forward now, days and weeks, we'll see lenders now coming back onto the market. In particular, in the last few days, we've had Precise and Kent Reliance come back onto the market, offering deals. So they were one of the lenders there were a couple of the lenders that pulled away from the market. But I guess now that they've got people working from home, they've got technology set up, so they've got staff, underwriters, and so on working remotely, they can now take on that new business. So from my point of view, I think we're going to see lenders coming back onto the market. We're going to see loan to values increasing. We're going to have products coming back onto the market, which will help a wider range of clients, whether you are a first-time buyer, you're an investor, you're a commercial landlord, and so on. But no, all I would say is if anybody's got an inquiry, whether you're a first-time buyer, you want to remortgage an investment property, or you want just general advice about your portfolio, all I would say is there are lenders that are supporting new applications, whether it's a remortgage or a purchase. So going back to your question about first-time buyers, yes, I can support you getting a mortgage for you. There are going to be delays in the process of the application because people are working remotely. If the property needs a valuation, now this is quite a hotly contested topic at the moment around valuations. Now, there are lenders at the moment that are supporting valuations, and they're doing that by way of automated valuation models and desktop valuations. So I've actually just got an email this morning at 10 to 12, so it's quite hot off the press. So I'll just give you a quick lowdown on who's doing automated valuations, if that's okay.
That would be brilliant. Yeah, this is literally exclusive, hot off the press.
Yes, I'll mention some names. So the likes of Bath Building Society, Kensington, Kent Reliance, Lend Invest, Masthaven, Precise, the mortgage lender, UTB, West One, Mansfield Bank. These are the guys that are doing automated valuation models. They've got a varied approach around the loan to values. It's circa up to 70% loan to value. So, but it goes to show that a lot more lenders are now have got their processes in place. They've spoken to their valuer panels, and they've got a process that they can get reliable valuations, reliable comparables. So the lender is more content on lending. So they've got that backup from their valuer panels. So it's good to see. This is hot off the press, as I said this morning.
That's really interesting.
My clients and reviewing their remortgages and so on. So it's what we do at our mortgage broker. It's all about giving back, right?
And for these specific types of loans that they're talking about, automated valuations is typically a desktop valuation using aggregated data and data tools. Is that right?
Yes, in short, that's what it's about. It's all about the sort of historic data that they've got on file, historic information that they can compare to. They'll look at the HPI index and recently sold data as well using land registry.
And for these types of loans that are going up to 70%, are they typically for residential units, or are they looking at commercial? Because commercial assets, from my understanding, have taken a big hit right now. There's a lot of uncertainty because only a third of all the tenants across the UK have paid their rent for the second quarter this year. So those assets now have come into a period of massive uncertainty. So these lenders now, are they talking about doing these desktop valuations? Is that specific for residential stuff that's already built, or is that development finance, bridging finance, or what? So what are they talking about there specifically?
So in particularly it's all around residential and buy-to-lets. So
right, got it.
Is up to residential buy-to-lets. I would say is there are a few bridging lender firms out there that are doing AVMs.
Yeah.
And they are sub 50% loan to value. So anything below 50% loan to value, they would take up an AVM, and that one in particular is Masthaven.
Okay, so that actually nicely brings me on to the next one. So bridging finance, you're saying 50% LTV, which is pretty low compared to what they were putting out 3 to 6 months ago. LTVs, and what sort of rates are we talking for that kind of leverage on a bridging finance? I
would need to go into this system because this has just been revised as of this morning, right? But they're doing AVMs up to 50% loan to value, and their max loans are £500,000.
Okay, and that's just one specific lender that you're talking about there.
Yeah, that's just one specific lender around bridging. The rest of the names that I mentioned there were doing AVMs on residential and or buy-to-lets.
And have you seen a similar reaction to most bridging lenders, and that there are many that have just put everything on pause while they kind of while they look after their legacy portfolio?
So it's a good question. I've spoken to numerous bridging lenders as we speak. So I'm actually doing a deal this morning with MT Finance. And this is a multi-unit freehold block. It's a purchase post-auction that was unsold.
Right.
So it's in Derby. It's just circa 100,000 purchase price. They're offering terms at 60% loan to value with retained interest. With regards to valuation, now this is something that we've spoken to them prior to submitting the application, and their stance is because it's unoccupied, which is a big brownie point. It's unoccupied. They are going to put the survey out to local surveyors in Derby, and so you can go and do a survey on the property and do a report and report back to the lender. So because it is unoccupied, there's no real reasons why they can't do it. So it's just a surveyor firm that will do it. So from that perspective, it's a good one for us and our client to purchase that property with probably no hindrance on the application timeframe.
That makes sense. I mean, I've been hearing a similar thing, that surveyors are valuers that want to get to sites because, you know, if the wheels, if everybody just stops, then it harms the economy even more. So everyone's looking at ways that we can be reasonable, so we can practice the social distancing. But in a time where there's a derelict building, you know, there's nobody on site, you're not going to be breaking any of the guidelines or the rules from the government. 3 weeks ago, maybe that wasn't the case, but from this next 3 week in the initial next three period, they're finding ways of thinking, okay, these are the projects that we can pursue and continue with as much as a normal service as possible. So that's as well. I mean, development finance, in terms of development finance, I work myself within development finance. What's your experience speaking to lenders and developers at the moment? I know the first 3 weeks, again, they were managing their portfolios. They were looking after a payment holiday requests, that kind of thing. Has anything moved since the initial 3 week period where we are today?
I think things are starting to move in the last couple of days and weeks to come. I think a lot of with development finance and bridging, because it's not an off-the-shelf product, and what I mean by that is the terms are not fixed like a regular Halifax mortgage, for example. Bridging and development finance, as you know very well, Sam, it's on a case-by-case basis. It's based on its own merits. It's on its own developer, the builder, the contractors, the GDVs, the build cost. So there's lots of variables and views that lenders will take, especially in the development finance and the bridging space. So I think with development and bridging, I think the underwriting is done on a manual basis. It's done on more of a commercially minded, and it's done on a common sense approach, right? So these are the conversations that we have with like the firms like yourself at Hilltop as well. So it's all about working with everyone collectively. So that'll be the broker, that'll be the lender, yourselves, and that'll be our client, right? So we've got to be open, we've got to be honest, and we've got to think commercially, but we've got to think about how the market's going to transition going forward. Now, I think there will be a new norm coming out of this. I think it's all about educating all ourselves around what the GDVs are going to look like tomorrow, you know, with the build costs, the materials, you know, cost of materials have been going up over the last few years quite dramatically. GDVs may take a hit, and I think development lenders may need to cut back. So it's a great space from a broker's perspective, because we get lenders, bridging lenders and development finance lenders really fighting for our business. So I tell my clients, I'll get you the best deal because I'm going to get those lenders fighting for your business. And we've talked about 90% of loan to cost. We've talked about 70% of GDV. So these are the sort of high level numbers that lenders work on. But I think just generally, I think the application process, whether you're buying your first home or you're doing a development finance deal, it's going to be a lot more scrutinized. And I think we're going to have to deep dive into applications and talk more about income streams. We're going to talk more about your experiences, talk more about the sectors that you work in. So are you employed? Are you in hospitality? You know, are you in travel? Are you in the restaurant business? So I think these questions will come up more and more. But I think as brokers, I think it's key that clients engage with us, because we do this for a living. You know, we've got access to every lender in the UK, whether you're buying your first home or you want to build 20 flats, you know. So we speak to you guys like on a direct basis, whether it's a Monday or Saturday. I'll still bug you, right? So it's all
The
about
fun never stops, Akhil. The fun never stops for people like you and I.
well, it's all about listen, we want to win, we want everyone to win, and we want to do the best for each of our businesses, right?
And so interestingly, I mean, I agree with all of that. And interestingly, you touched upon when someone's making an application and those changes to the underwriting process, the kind of questions that people are going to ask. In some cases, I know that, with things like KYC, AML, CDD over the last, 5-10 years, that's become more and more of a thing. And some borrowers, they feel like some of these questions have become a little bit intrusive. But that's just the nature of the marketplace and the kind of questions they're getting asked. So what I wanted to ask you was, in terms of speaking to a new client, when somebody's speaking to you about whether it be bridging finance or development finance, these more tricky, complex, it's not tick box lending as much as a residential mortgage. When someone's making an application, what makes you happy to see that application? How much detail do they need to go into? Do they need to give you like a big, thick project overview handbook of all the stuff that they've, or is it a one sheet of paper, or how does the application go for you? What's the ideal way of doing it?
Okay, so I usually break it down sort of in 3 or 4 segments, right? So the first segment is about the applicants. So let's assume it's one applicant. So I'll deep dive into the applicant itself, who you are, what's your credit profile look like, do you have any bankruptcy, you got any CCJs in the background, is there any adverse, right? So I want to deep dive into all the nitty gritty about the applicant. The second phase would be around the income, right? So are they employed, are they self-employed? And I'll deep dive into, how long have they been with their employers, what's their income look like, do they get any bonuses, commissions, and so on. If they are self-employed, I'll probably deep dive into their tax returns. Yeah, so are they running a trading business? Are they a portfolio landlord? Are they declaring their income? So I'll deep dive into their tax returns, and along with that, I'll deep dive into their P&Ls, so their profit and loss statements, and including their balance sheets as well.
Yeah.
Another thing I'll deep dive into would be around the exit plans, right? So if, for example, they're purchasing a property like we are, this post-auction one, what's the exit plan, right? Because no one wants to remain on a bridge for longer than necessary, because yes, it's a great resource, a great tool to have in the toolbox, but ultimately a mortgage is always going to be cheaper than a bridging loan, right?
Short-term stuff, that bridging, yeah,
it's short-term stuff, right? You want to get in and out of it as soon as, right? So we look at the exit plan. So with that, we'll look into the applicant, we'll look into their income, and then as brokers, can we place this with a good buy-to-let lender in good time as an exit? Because we all need to document this and share this with the lender as well, because they ask that question, what's the exit? Right. And then the fourth thing is around, if this was a refurbishment project or a development finance project, we probably want to look into the build costs, the time frames that it's going to take to do the refurb or the development. So we'll deep dive into their experience around the refurb and development, who their contractors are, basically their CV, right, and what's their plans with the property.
Track record.
Yeah, their track record, right? So we'll look at their profiles with around their CV. Now, with development and refurbishment, it is very likely that they're going to need to apply for planning permission, right? Now, you both know planning authorities are rigorous in what they do. If anybody's been through planning applications, and if you've succeeded first time, amazing, go and have a drink, But most on I would say more occasions than not, there will be an appeal process. It will get declined, or you may need to amend the application, right? You probably see this at Hilltop, right? So how concrete is your planning application? And what we do at our mortgage broker is, if we are structuring development finance, we engage sometimes with our planning consultant. So
that's brilliant. You've got a planning consultant on the panel as well. That's
correct. Yeah. So we work with Emily, who's an ex-town planner, and their firm's called ET Planning. Their office is only not too far from ours here, within 5 minutes drive. So it's convenient from that perspective, and it gives an added resource to our sort of resource and service level. And if a client needs planning advice, or they need to put in a pre-planning app, we do refer to Emily and the client. If they choose to use her services, then they go ahead. But those are the sort of the four key elements around what I would deep dive into before I approach a lender like yourself, because ultimately these are the sort of questions I guess you're going to be asking, right? So I might as well just get the information up front, and then I
Yeah,
can
exactly.
you. And it's key because one, you'll take my application more seriously. Two, we're not going to waste time around toing and throwing with information. And thirdly, you know, I mean, I've been doing this for quite some time, so I know the questions that are going to be asked. There may be some follow-ups, but if I get that information over to you guys as development lenders, it will give you a good base to work from. Do you agree?
Absolutely, 100%. The more information that we have up front
Yes.
makes the process a lot smoother once for the credit report to be created, for it to go to the credit committee and get those terms approved. Otherwise, there's a lot of backwards and forwards of asking the same questions over and over again that as you say, are pretty predictable anyway.
Yeah.
So no, that totally makes sense. Now, in terms of, I guess, for first-time buyers and for buy-to-let investors, it's a lot more straightforward. And for bridging, similarly, you've just got to do a valuation on the asset. You do some checks on their personal background, but a lot of you do some checks on their income, but a lot of the underwriting is against the asset itself, right?
Yeah, with bridging finance, a lot of clients think that it's a quick one-page application. I wish it was the case with most bridging lenders. Unfortunately, those pages are now becoming 2, 3, 10 pages long. So some bridging lenders,
Really?
yeah, unfortunately, some bridging lenders underwrite it like it's a mortgage. Now, I guess they've got to do their right thing because they're funded in different manners. So they
Yeah.
might be privately, institutionally, or through some pension and fund managers. So I get their processing. We have to adapt to that and basically comply with whatever they require. So we work with all bridging lenders. They've all got their pros, they've all got their cons, but ultimately we work with the right ones that are the right fit for our client. With regards to mortgage applications, yes, they are going to be they're going to be a lot more detailed. And they are going to home in on particularly those experiences that we just talked about, those sort of variables around the applicant, around their income, around their expenditure,
Right.
and their committed loans, for example, in the background as well.
I had two questions that came out of that as well. So in terms of talking about first-time buyers, like 3 months ago, I had a friend of mine who applied for a 90% LTV residential mortgage for his second home. It was kind of scaling up a little bit, but is that commonplace? Can we still get right now 90% LTV resi mortgages?
Yes, yes. In short, there are a few lenders out there that are offering still 90% mortgages. The rates are a little bit more higher than they were.
What are we talking? Like higher, meaning like where we at?
You know
Like
what?
3% or like 5% or?
If you want, what I'll do is, because we've got a great tool here where we look at the open market. Yeah. So what you do is, if you ask me your next question, I'll quickly look into that right now for you. How about that?
Okay, yeah, that's perfect. Okay, so the other question that came to mind was
Yeah.
that since 2008 especially, there's been a growth of a lot of private lenders, a lot of private finance available in the marketplace, structured by different funds from different places because of restrictions from the banks, etc. Having worked in banks and that kind of thing, what, in your opinion, is the best type of lender that you find easier to work with? I mean, typically I've heard banks are always asked the most questions. So do you ever favor as a broker a specific type of lender that's set up in a specific way?
To be honest with you, I don't favor anybody.
Right.
I treat them, to be honest with you, I do treat them all the same. Ultimately, I'll always, as we always do at our mortgage broker, we find the client the right mortgage and we do the right thing by them. And ultimately, if we can't help them, we'll tell them we can't help them because of ABC reason.
Yeah.
Or now's not the right time. So somebody comes to us for a 95% first-time buyer mortgage, it's not available, right? So I would say to them is, let's park it for the moment, and I will diarize a call to give you a call in 3 weeks, 4 weeks, 2 weeks, or even when things change. We've got a diary system where we follow up with our clients. So it's not, Sam, sorry, we can't help you today, goodbye, and never speak to you again. It's all about relationships. So it's one of my, it's one of those big things that I enjoy doing, is building relationships, right? So
Yeah.
I can't help you today. I'm still going to follow up with you to see how you are and if things have changed, because circumstances can change, right? You know,
They might have had a deposit might have come in from somewhere, and they say, you know what, I don't need the 95, I can do like 80 or something.
there you go. You hit the nail on the head. They got an inheritance. They won the lottery the day before. It could be any reason, right? So it's all about following up. It's all about relationships. It's all about doing the right thing. But no, going to your question, I don't favor any lender. All lenders, as I said, they've all got their pros and cons. But the lender we'll favor is the lender that makes sense for our client, right?
So yeah, so some of them might be able to work a lot faster, but their rates might be a little bit more bit more punchy. But some of them, for example, might be have really keen rates, but you'll just have to wait a little bit longer to process it. Some people might be price sensitive and can afford that time.
Yes, and it's one you hit the nail on the head there. And what we do is we'll always give the client A and B option at the outset. And what we mean by that is give them two options, whereby service might be a bit longer to get it over the line, detailed application, but the rate's slightly lower. Or as we might be able to get this application through faster with you because their turnarounds are a lot quicker, i.e. they're looking at application within 48 hours and they turn things into offers within 7 days, for example. So we work with the client, we work with the lenders, but we do the right thing. That's the key thing to take out of this.
That's great. I mean, I think that people will really resonate with, giving people a bespoke product based on their personal circumstances. And I think that's where finances have been going for a while now, with quite a lot of capital available in the market relatively. Now, the other question that I had was about where we are in the market today with regards to COVID-19. It's kind of the talking point. We are in lockdown. You're in isolation in your office. I'm working from home.
Yeah.
We've talked about what's happened over the last 3 to 4 weeks, let's say. Where do you see the future of this particular economic slowdown going? You mentioned you started kind of back in 2002, so you've had a vast amount of experience. You've been surrounded all your life by entrepreneurs that have probably gone through different cycles. In terms of your understanding of this particular crisis, where do you see the next 6, 12, 18, 24 months going?
Oh God, I wish I have the right answer and it came true. I'd make a lot of money, wouldn't I? I think these sort of questions are probably coming up on hundreds of Zoom calls right as we speak across the whole world, right?
Exactly.
What's going to happen in the future? What's the best guesstimate, right? The honest answer is no one knows, but all we can do is guess. We can forecast. But what I would say is, rather than guessing and forecasting, why don't we think of worst case? Why don't we amend our business models and basically review how we look at deals or how we source deals going forward, right? And look at worst case scenarios. So what I mean by that is, if we've always, in your space, right? If you think building a block of flats costs £200 a square foot, right? Give or take, yeah?
Yeah.
And if we think GDVs are going to plummet tomorrow, build costs are going to go up, materials are going to go up, take a haircut on that, right? Even if you increase the build cost by 20%, so you take it to 220, right? You reduce your GDVs down for 20% as well. If you factor in these into your calculation and your model, you might get to know where you're going to be.
Totally makes sense.
And I think lenders are going to do the same thing, right? I'm sorry to talk for you, but I think they're gonna be looking at these sort of forecasts. No one knows where we're going to be, but let's look at a 20% reduction in GDVs. Let's look at a 20% increase in build costs, and perhaps add a couple of extra months on for the refinance side, right? Because the applications might be a lot more longer. There's a backlog of surveyors and so on. So I think rather than forecasting and guessing, let's keep the ball on our side of the court and amend things in our process that we can keep control of. And
absolutely.
I think that's the best way of doing it, in short, to be honest with you.
It's stress testing, really. It's, we are where we are right now. Is the market going to go up or down by 10, 20%? You've got things like quantitative easing, which has inflationary pressures, but you've got all kinds of industries that are suffering right now. So it's by stress testing the, as you say, build costs, by stress testing the sales periods, by stress testing every single variable within whatever you're trying to do.
Yeah.
It's probably the best way to mitigate any of the risks along the way. Because as you say, right now it's difficult to actually put a finger on where this is going to end up, because we're still not out of lockdown, which
Yeah, this is the 21st of April. They said it's going to be another 3 weeks. Who knows? You know, I want my kids to go back to school, as I said, right? But I've already put it in my head, and me and my wife have already spoken about it. It's homeschooling until September. So it's taking things into our own hands and saying, let's look at worst case. Kids go back to work. Kids go back to school in September. What are we going to do? How are we going to self-educate them?
Yeah. That's interesting. Actually, I'd like to talk to you about that very quickly, because there's going to be a lot of parents out there. In terms of, I mean, how many kids do you have? How old are they?
I've got 2 boys. I've got Aryan, who's 9, and I've got Kyan, who's going to be 6 in a couple of weeks.
Wow. Okay. So 2 young men. They're spending time at home. How have you been having to kind of put timetables together so that they have some sort of normality in their day?
Yeah, so you know, I'm a flexible parent. We both are, me and my wife. But again, we've got to set the guidelines, right? So we've had an Easter break the last couple of weeks, but we didn't tell them it was Easter holiday. So we still gave them the homework to do.
Yeah.
Relaxed, and we've said to them that your day is not 9 to 3; it's going to be sort of 10 to 2 now. So it's 4 hours. But we want to really home in on your homework. So we've created timetables for them. They know they've got maths, they've got phonics, they've got some science. And to be honest with you, the kids are great, right? And I think it's all about disciplines, right? So they know they've got to do this, this, this. And if they do that, they get to sleep in half an hour later, Monday to Friday.
Right.
So you've got to incentivize them, right? And I guess it's just the way, it's just working smart, right? And we've got to put that into our children, because we don't, no one's going to do it, right?
So in terms of, this property people is all about sharing ideas, experiences, problems, and solutions. So there's twofold, I guess. One, I'd like to ask you firstly, in terms of this whole crisis, how has it benefited you in any way? If in any way, what have you learned about yourself or your business in this last 2-3 weeks?
Well, what I've learned is don't take anything for granted, right? We've been readily available just to pick up and do whatever we want at any time of the day. To be honest, it has been a shock to the system, right? And I can't lie about it. It's definitely been a shock to the system around who can go out at what times. You know what I mean? Restaurants are closed. People can't do their normal day jobs. So there is a bit of a lag in the system. But I think what we found as humans, we've adapted. And I think if it's things like this have reassured us that we can work from home, we can cook at home, we can exercise from home. Not that I do, but I need to. But yeah,
But yeah, the potential is there.
Yeah, the options are there. So I think it's definitely a hit to our systems, and a lot of people don't like change, right? But you've got to adapt. What are you going to do, right? So you have to adapt. You've got to you just got to roll with it, I say, and things always work out. If one door closes, the other one opens, but you've got to adapt. You can't sit at home and cry. You've just got to work at it, and that's the business ethos that we've got as a team, and how we portray ourselves is okay. We've got a decline from this lender. Okay, who else is out there in the market? Who can we talk to? How can we restructure something, for example? So it's working with other options out there. I always say there's always an option 2, an option 3, option 4, albeit the rates may go up, for example, in our industry, or the application process might be a bit long-winded, or we might have an extra 3 pages to fill out on the application form. But so be it, right? We just work with it. And ultimately, we want to get it over the line as best as possible.
Well, that actually kind of almost answers the second question that I was going to ask, which is, in terms of the problems that you see in the marketplace for specifically finance brokers, mortgage brokers, and the finance market, specifically related to property, as you say. Well, for mortgage brokers, one of the things that I was thinking that I've noticed actually is that some of the developers, specifically from development, have been let down by their existing lender for whatever reason, especially in that first few weeks. So they've actually taken the reins of their finance search, and started to seek other avenues, because their broker, for whatever reason, hasn't been able to provide them with, he doesn't have enough relationships, and the lenders that he normally uses aren't available anymore. So they've had to adapt, and they've had to go direct to source. So that was one of the problems that I'd foreseen within mortgage brokering. But at the same time, within finance, as you say, loan to values are coming down. Pricing has probably gone up to adjust with the risk adjustment. So in terms of those problems that we've identified, in terms of is there anything else that you can see in the marketplace? And I mean, you touched on the solution as well. It's just to kind of keep going and find new people to do business with, because there's always going to be somebody out there.
Yeah, no, I think going back to your first point around the mortgage broker didn't find another solution or another exit. I think that's totally wrong. Now, I can reassure you and your viewers as well that we never shy away from any declines or any valuation appeals. We definitely work with our clients, and ultimately, if the lender can't support, we'll actually go to them to say, why can't you support? So we'll always challenge them first and foremost. Because we've put energy in, the client may have paid a valuation fee or an application fee. We'll always challenge our lenders to say why, and then why again, or why is that, and give them our reasoning for it. And ultimately, if they say no, okay, fine, we've tried our best. But what we do then is we go out to the market and see what other lenders are available. So I don't go to my client to say lender X said no, and oh, you know what, it's a shame. But what I do is I tell my client lender X couldn't help, and these are the reasons. But what I've done before I called you is did my research, spoke to a lender, gave them the reasons why X lender couldn't help, and now I've got this lender lined up and they can support the application. So it's all about working smart, and that's what I do. And I go to my client with the reason why it's been declined or offer's been revoked. I go with them with a solution, right? So all the client wants to know is, what's my solution? How am I going to get the funding and my keys for my first home or my investment property, right? So for us, it's all about finding solutions, and that's what we do as brokers. Well, I can't talk for every broker, but our mortgage brokers, all we do is we find client solutions. If we don't find client solutions, we might as well go home and sleep, right? It makes no sense being in the trade.
Yeah, you are one of the good guys in the business, Akhil. I'll vouch for that. So that's pretty much all the questions that I had for today. I would be great for us to do this again at some point, so that we can see 6, 12 months down the line, 18 months down the line, where we've ended up and how things have adapted and changed to the new landscape, to the new norm that we find ourselves in. But thank you ever so much again for joining us.
Sorry.
Yeah.
You know, back to your question around the 90% mortgages. See, I haven't.
Yes.
And I said I was going to research for you. So
well done.
I always hold my promise. Yes, 90% and 95% as well. Mortgages available. So
they are available, yeah. What
I'll
are the rates on those?
So we've got, I always find their name really hard to pronounce, but it's Monmouthshire Building Society.
Yeah, okay.
They've got a rate switch at 95% loan to value at 2.85.
That's decent.
Yes. And then we've also got teachers who've got a 90% at 2.99.
That's very interesting. And then, so in terms of for those first-time buyers out there that are trying to get on the market, on the ladder, in terms of the multiple of their income, is there any color on that? Do they need to get kind of 4 times their income?
Yeah. It's a good question. Historically, lenders have always worked on a 4 multiple, 4.5 multiple, even 6 multiple. But now, because of the regulation around mortgages, it's done on an income and expenditure basis. So income are not calculated times 4, which is you can still roughly calculate on that premise. However, lenders want to deep dive into their income, look at their core expenses, and minusing any other committed loans like car loans, personal loans, and so on. So what we do as brokers is we've got access to their online calculators. So we can plug in that information and give them a good ballpark figure of their net loans or the mortgage that we can raise for them. So I'll definitely encourage clients to give us a call. We don't charge any upfront fees around giving advice, giving you quotes. So yeah, please, viewers, give us a shout. We're open for business.
Which was what I was about to wrap up on. So thank you very much for bringing us back to that point, because I did forget about that, and that's actually hugely valuable. I do know one specific person that this is going to be good for them. Now, if somebody wants to contact you, what is the best way?
Sure. I think the website's always a good place to start. So our website is ourmortgagebroker.co.uk. And they can also call us on our landline. You may want to put this in your caption below, but the landline,
Yes.
the landline 0203 971 1234. So it's a nice simple number, but all the information is readily available and are on the website.
They'll be in the show notes below, so just check them out. All the contact details. You're on LinkedIn, you're on social media?
Yeah, we've got all the social media handles. We haven't got TikTok yet. Apparently this is a new craze at TikTok, but we're gonna leave that one for the moment. But we're on LinkedIn. We're on it's one of our go-to social media handles. So LinkedIn, Instagram, Facebook, all the regular sites, right? So look out for our videos that we put out. We're always putting information out on our social media channels. If anybody's got any questions, just come through to us by any means.
That's amazing. Thank you ever so much. It's always a pleasure to hang out with somebody that's a massive property pro, as well as somebody that's always so positive. So thanks again, Akhil. Have a great day. We'll catch up again soon.
Cheers, Sam. Thanks for having me.
All the best.